Welcome to IFRS Meaning. Today, we will talk about right-of-use assets and we will develop a practical example.
Right-of-use asset in IFRS 16 represents the right for a lessee to use an underlying asset during the term of the lease. For example, Company A leases a building from Entity B. In this case, Company A will be the lessee, and Entity B will be the lessor company. The previous is highly relevant because lease accounting for lessees changed radically from the entry into force of IFRS 16. In other words, before IFRS 16, lessees were classified as operating and finance. That is, the lessee was financial if, for example, the asset was transferred to the lessee at the end of the contract. In this case, the lessee recognized a property, plant, and equipment. And on the other hand, if the lease was operating, the lessee entity recognized in profit or loss expense for the monthly rental payment of the asset. From the lessor's point of view, IFRS 16 is unchanged from the previous standard. However, there was disagreement with this model because the information presented on operating leases lacked transparency and did not meet the user's needs for the financial statements. For this reason, the concept of the operating and financial lease was eliminated by a concept called a right-of-use asset. So, what is a right-of-use asset? As we said before, an asset of this nature represents the right to use the asset for a certain period. In other words, it is the benefit associated with using an asset in a lease contract. Continuing with the analysis, then what is the difference between a right-of-use asset and property, plant, and equipment? The difference when exists a property, plant, and equipment is that an entity controls the asset. While in a right-of-use asset, an entity has control over the use of an asset for a specified period. That is, the control over an asset is so different from control over its use of an asset for a period established in a contract. However, both assets must be recognized in the statement of financial position and recognize their depreciation. Nevertheless, in the case of property, plant, and equipment, its depreciation will be over its useful life, while in a right-of-use asset over the useful life of the lease. Knowing the above, how is the accounting recognition of right-of-use asset? According to paragraph 24 of IFRS 16, the initial cost of a right-of-use asset will be made up of the following elements. The amount of the initial measurement of the lease liability, as described in paragraph 26. That is, at the present value of the lease payments, as we will see in an example later. Any lease payments made before the commencement date, less any lease incentives received. Any initial direct costs incurred by the lessee. And decommissioning costs. If you are not familiar with the concept of decommissioning costs in the video description, you can find a practical example. So, this is an example of an entity leases a warehouse for 6 years. An annual payment of $200,000 is established for the right to use the asset. The company will use the warehouse to store medicines. Due to medicine's characteristics, it will be necessary to make modifications to the asset to meet the requirements to store this type of inventory. For this, it was necessary to incur disbursements of $50,000. According to the warehouse owner, once 6 years have passed, the entity will return the asset under the same conditions as those established at the beginning of the agreement. For this reason, the company's management considers it will have to incur $30,000 to restore the asset once the rental contract ends. The entity uses a 10% rate to determine the present value effect of lease payments and show the effect of decommissioning costs. At the beginning of year 4, the entity considers the disbursements to restore the asset should go from $30,000 to $65,000. The objective of this exercise is to determine the carrying amount of the right-of-use asset and the lease liability at the beginning of year 4. The first thing we must do is make the amortization table of the lease liability. So, the present value at the beginning of the contract is equal to $871,052. On the other hand, the principal payment for year 1 will be the difference between the present value of the lease liability for year 1 and 2. And in the same way, the principal payment for year 2 will be the difference between the present value of the lease liability for years 2 and 3. Later we will see the accounting recognition of these calculations. And finally, the interest calculation for year 1 will be made up of the difference between the annual lease payment of $200,000 minus the principal payment. We do the same for year 2. In this way, we can proceed to make the amortization table for dismantling costs. So, we know that the entity must disburse $30,000 at the end of the lease to leave the asset in the same condition as it was to return at the beginning of the contract. It is important to say that according to IFRS 16, dismantling costs must be recognized as a higher value of a right-of-use asset. But it would be a mistake to recognize the disbursement of $30,000 as part of the right-of-use asset because these resources will be disbursed in the future. The correct thing is to recognize the value of $30,000 brought to present value. This results in a decommissioning cost equivalent to $16,934. Now that we have these calculations, we can know what is the initial value of our right-of-use asset is. So, we have that our right-of-use asset will be made up of the present value of the lease liability equivalent to $871,052. We must also add the disbursements of $50,000 to adapt the asset to the necessary conditions to operate in accordance with the specifications of the entity's management. And finally, the dismantling costs of $16,934. This operation results in a total of $937,986. In this way, the accounting recognition would be as follows. As we can see, dismantling costs were recognized as a higher value of the right-of-use asset. The next step will be to calculate the depreciation of the right-of-use asset until the end of year 3. This gives a value of $468,993. But this is not all, we must also recognize the lease payment and interest. As you can see, the entity reversed 3 years of the financial obligation, and on the other hand, the entity recognized interest for 3 years. In addition, it's necessary to reverse the decommissioning provision. In this way, the accounting recognition would be as follows. As we can see, we must return the dismantling provision until we reach $30,000. However, at this point we have a small problem. It turns out that the entity at this point considers that at the end of the lease the costs for dismantling will no longer be $30,000, but $65,000. When an event of this nature occurs, an entity should review the IFRS 1. Paragraph 5 of IFRS 1, changes in existing liabilities for decommissioning, restoration, and similar, establishes changes in the decommissioning liability will be added or deducted from the asset and in the same way with the arrangement liability. However, before making this accounting adjustment, we must determine the carrying amount of the decommissioning liability at the end of year 3. For this we know that the initial balance of the dismantling provision is equal to $16,934. This value must be adjusted by the interests of years 1, 2, and 3. Since the balance of the dismantling provision at the end of year 3 is equal to $22,539. Nevertheless, since there was a change in the estimate of dismantling costs, it is necessary to make a new amortization table. As we can see, the new present value balance is $48,835, and the old balance is $22,539. Therefore, it is necessary to adjust the right-of-use asset and the lease liability by $26,296, which is the difference between $48,835 and $22,539. The accounting recognition of this adjustment will affect both the right-of-use asset and the liability of the contract in the same amount. Now to calculate the carrying amount of the asset at the end of year 3, we must do the following operation. We know that the initial balance of this asset is $937,986. Therefore, the accumulated depreciation at the end of year 3 will be 468,993. So, the carrying amount of the right-of-use asset in this example will be 468,993. This balance must be affected by the change in the estimate of dismantling costs equivalent to 26,296. In this way, the new carrying amount at the beginning of year 4 is 495,289. On the other hand, we see that the liability of the contract at the end of year 3 is equal to 497,370. This value must also be affected by the change in the estimate of dismantling costs. So, the new contract liability at the beginning of year 4 is 523,666. In conclusion, we show an overview of right-of-use asset definition. If you have any questions, leave us a comment, and do not forget to subscribe to this channel. I hope this video has been useful and see you in the next videos. Finally, if you want to learn IFRS, be an expert and make a difference, we remind you to review our course on International Financial Reporting Standards. The course has more than 270 explanatory videos, more than 370 analysis questions, personalized advice, and real-world examples and cases. In the video description, you can find all the course information. Cheer up, and take your professional career to the next level.